Well, I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone gliding, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. Well, this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward to what might happen in the next week, and hopefully lots of great ideas and opportunities for you throughout this show. Well, the stock market continued its upward climb last week as investors grabbed onto any tidbit of positive news and drove the markets higher. Most of the gains occurred overnight with big upside gaps in the futures. During the regular trading session, there was little in the way of retracements, but overall, it was really a calm week as there were, well, not much chop going on, much to the chagrin of the shorter-term traders. What happened was that one gain simply built on the next one, and any dip really brought buyers in. So there wasn't a lot of movement at all. Focus remained on the U.S.-China trade talks, administration doing a great job of managing that news. They've been saying that there's an imminent signing of a huge deal coming, and that's been lifting the markets with no matter what the news was overnight that might have been a little bit negative out of Europe or anywhere else. They're just grabbing onto that, and that's driving the bears simply into their caves, ruminating maybe into insanity at this point as the market now has moved up so significantly for this entire first quarter and beyond of this year. It seems you should only be able to celebrate good news on an item so many times, but this is really breaking the historic norms. POTUS says now that they're a month away, pushing the date out from an epic deal on trade. And I say, looking at this, is that they probably did solve the easy issues, and those deal breakers out there probably remain. So you wonder if you could get any more good news out of this versus the impact of the potential bad news out of the trade deal. I don't want to be optimistic or pessimistic about that. However, it seems to me that, well, the extent of being able to celebrate this same thing on a positive way is just getting way out of hand. The Fed and other central banks around the world have ignited speculative juices. Bitcoin or cryptocurrencies may simply be the proof of that. One day this week, they had a 20% plus gain. They backed off a little bit from that, but there was just absolutely huge surge going on. Let's take a look at Bitcoin, and I'm going to show you what my cycle analysis looks like in this cryptocurrency. Now, this is one cryptocurrency out of nearly 2,000 cryptocurrencies out there. This is the Bitcoin market right there, and we're looking at two charts. You can see on the left is the Bitcoin cycle analysis for the weekly, and on the right is the Bitcoin cycle analysis for the daily. We're going to look at this because this is kind of important about these speculative juices I'm talking about. And you can see that it has come up into this resistance zone. This is actually higher than we actually thought would be even the high for the year, but now things have improved. I want you to note that you had this huge decline that was coming down from, 20,000 in Bitcoin at this incredibly huge high price, and then you made a cycle low right over here. You could see this nesting of time right in here, and then you had a couple of minor cycles and the big cycle come down and make a low right on time and hits our target zone right down over there, makes a low of 31.20 in Bitcoin, which is truthfully a crash, as you have lost approximately 85% of the value. But now we've gotten a rally and coming up into this resistance sell zone. I think it's going to actually make it higher now. And the reason for that is because there's only a time for correction out into May. That says that you'll probably get some chop around and pullback, but then moving up again potentially to the top of this resistance level, which is at about 6,500 in Bitcoin. So I'm revising my projection for the year in Bitcoin up to 6,500. Now let's just take a little shorter term look. Now you can see this surge right over there. That was that surge of 20% that came simply in one day. And I want you to see this is where the resistance zone is. And the important thing to look at is the accumulation distribution. You see this line right up over here? What this shows is the massive amount of buying volume that came in right there. So like I said, we're likely to correct out into May, and you can see this cycle right in here that's rallying and ends sometime in May. But then after that, I think the market's going to move up, and it actually could move higher right now, because when you see this kind of massive buying coming in, you know that the speculative juices are out there in a very strong way. So this Bitcoin move that we have coming in here I think that that's an important aspect of and a reflection of what's going on here in the world. The world yearns for a currency that has accountability to it, that has real value to it. And Bitcoin maybe started out as it was, you know, the first of the well-accepted cryptocurrencies out there. If you don't know, a cryptocurrency is essentially a measure. The value that comes from it is a measure of digital work. And computers do these really extensive problems. They solve problems, and when they solve the problem, it builds a blockchain. That's what they call it. And that's how that has value, because you did work to create it. They say it's like digging for gold, digging for answers. It's still work, and it still has value. I have, I wrote articles about that years ago on that, and still question whether or not that's true value. However, the value in Bitcoin was because there was a cap on the number that could be produced, some 21 million. And when you have a limit to something that has a perceived value, then, well, it makes sense, some sense, right? But the fact that you have nearly 2,000 cryptocurrencies out there, well, that kills that whole idea, because even though you can limit the number of Bitcoin, there's no limit to what can be created out there, and cryptocurrencies are going to be written up one day as the tulips of the 21st century. So they're going to go away, and there's going to be a huge crash in them. But for the moment, the world is just looking desperately for something that has value other than world currencies, which are being debased daily. So with central banks doing this, there's just some desperation to find something of real value. And when this whole thing implodes, and it's going to, you're going to see cryptocurrencies go from whatever there are now, close to 2,000 to probably under 100. Then when that day comes, well, then things of real value will have already been surging to the upside. I'm not a gold bug generally. I just look at the charts, and I think gold is going to have its day not too far off for exactly this same reason. So just think about that for the moment. The buyers are going crazy and probably will push cryptocurrencies up again. This is likely a big hook, and lots of trouble out there for this modern day tulips. Stock market, well, momentum is king. And I said this last week, and I said it during the week when I did recordings. And no matter what my long-term analysis is, and no matter what my gut feel is, and no matter what the central bank madness is that's going on, the eventuality is that the markets will come down. But in the meantime, momentum is king, and the momentum has been extraordinarily positive. It doesn't matter if you're any one of the perma bears that are out there, like Stockman or Schiff or Marinino, Austin Fitz, Catherine Austin Fitz. I mean, they're out there all of the time speaking bearish, and I've been bearish lately based on the longer-term technicals that I look at. I think it is eventually going to resolve itself. Eventually is a long time, and sometime probably late this year before there's a big top in the bull market. But as long as momentum stays positive, the bulls are going to stay in control. And when that's over, the downside will be big. But in the meantime, who am I to get in the way? I've already been in the way a couple times in here in recent times, and my account suffers for that. So I do put my money where my mouth is, and at this time, I don't want to fade the momentum because that plainly is king. So my commitments to the short side have been small. However, there will be a day not that far off when this craziness that we're in right now is over. And in the meantime, speculative fervor, you can see, is out there in Bitcoin, the big reflection. Let's take a look at what happened in the stock market this week as we switch over and look at our 60-minute chart of the S&P 500. That is the ES. And you can see in here that there was a very significant uptrend. And there you go, very clear. As all of the news, whatever it was that might have broken the market or brought corrections in during the day, well, it didn't last. And we've clearly had this uptrend going on all week long. Even had a couple of dips during the intraday in here. You had 1, 2, 3 in a row, but you could see the buyers are out there waiting and just came back in. On Monday, this big upside gap came as China's sentiment numbers improved and there was optimism in the China trade talks, and you got this big upside gap. And we've had a lot of gaps, and usually when you get gaps, the market gets tired. Actually, this morning was the fourth gap in this upside cycle that we're looking at in the last 10 days or so, 12 days. So that is important when you look at that, and that's probably going to bring a correction that I'll talk about at the end of the show, a minor one. Here you can see retail sales, they dropped 0.2%, and that happened before the opening here on Monday. And that was not a good piece of news, but it could not break the market, as you can see. And buying just continued here on Monday. That was probably the best follow-through that we had all week long on an upside gap. Here's that Bitcoin surge. It jumps 20% all the way up to 50.95. Eventually made it to 53.50, pulls back. This is what broke the market here early on Tuesday morning as Walgreens weighed on the Dow on the downside on poor earnings and also some issues from Amazon. I'm going to show you that chart later on. And then, of course, the market rallied back. Here, Asia stocks jumped to a 7-month high. And on a report that U.S.-China deal was really close. There you go, and the markets moved up. ADP came out at 129K private jobs created. That was the slowest since September of 17. You had continuation rally, and then it fell off, and buyers came in again Wednesday. Here, German data was really weak overnight. You got selling. Jobless claims, though, at their lowest point since 1969. It shows you. There is huge conflict between an economy that looks slow and people that are employed, but they're employed really in jobs that they'd probably not like to be in, not earning what they could earn as the middle class and Main Street gets left behind based on the current economics. Wall Street Journal reports in here that trade talks had been progressing, and both sides are confident, but there would be no announcement this week as they start to push it out. So the market opens higher, comes off. In this case, the market, we had NASDAQ down about 40 right over here, but the Dow up about 100. So there was some real mixed type trading going on here on Thursday. And Friday overnight, the markets move up. Payroll numbers up 196K. That was stronger than you might have thought, since there was only 20,000 that were produced the previous month. They upgraded that to 33. And here is maybe the ridiculous news of the week. POTUS called for a rate cut and more quantitative easing right now. He can't stand the concept of that yield curve being negative, and he wants to do anything to stimulate the economy. So, well, maybe he can get reelected or help the Republicans through into the 2020 election. This is absolutely absurd. Here we have payrolls that have been, pretty much in line, moving up. You have the lowest jobless claims since 1969. and he wants to cut rates 50 basis points. And he's putting guys on there like Moore and Kane on the Fed that can be his mouthpieces for ridiculous statements like this. And here you get the market moving up here on Fridays. You can see basically not a lot of chop or any sell-off did bring the market right back. And you have a condition here of really a lot of strength in the market when you look at that. Let's, as far as the stock market goes, the broad index is the S&P 500, the Dow, and the Russell up about 2% on the week. The NASDAQ doing a little better, up about 3% on the week. The bond market, the bonds, 30-year bonds fell 1 3/4 points. And the 10-year yields gained 9 basis points. And this might have been what mostly stimulated the buying in the market. And that is that even though the short end of the curve, which inverted first and is still inverted, the 3-month to 10-year yield curve has gone out to a positive 7 basis points. So it was about a negative 11 basis points in a moment of panic a week ago, and now it has moved to a positive 7 basis points. So it's no longer inverted, and that is giving hope to investors that, well, maybe that was just an anomalous thing that it inverted, and we don't really have a recession out there. Of course, we do have a recession out there, but is it start in 3 months, or does it start in a year? Who knows? Inverted yield curves come well before the recession actually starts, and stock markets tend to hold up well after that happens also. So positive yield curve is giving some relief. The gold market down $1 this week, approximately the dollar up about 0.2% in a pretty choppy week. Oil market gains again as OPEC holds to their cutting of production. You also have the sanctions on Venezuela and Iran, which is also giving hope to the bulls, and of course worldwide stimulus is as they jump in and buy more and more oil, assuming that demand eventually will go up. So you can't get oil up much higher before you stimulate a lot of production. So I don't think there's a lot more on the upside, and I'll talk about that again when we get to the short-term view for the coming week. That's it for the opening of this show, and we're going to get to the best and worst stocks for the week in just a moment. Are you a student of the markets, learning technical analysis, or even an experienced trader really expanding your knowledge on the markets and technical analysis? Well, you're going to love our Tools for Text category in our video library. We have a huge amount of videos in here where we look at an amazing number of studies, and I give you my experience in detail about these studies, and you're just going to find this fascinating. And a lot of these things you're going to apply to your own trading. I want you to get a look at just part of this list in here, and you're going to think it's just a fantastic opportunity. This is our Tools for Text list of 80 videos for chartists. You'll love these, and there are many more than I'm showing you right here. We have the tricks, which is a triple exponential moving average, RSI, and different variations of relative strength, stochastics, and many oscillators, how to use Heikin-Ashi candlesticks, how to do swing high, swing low analysis. I have a few videos on that, and you're going to just be amazed at the quality of how you understand markets using that. Fibonacci retracements, fib extensions, my own study, the slim ribbon, used by hundreds and hundreds of traders out there. Gap trading, intraday setups, momentum and earnings plays, money flow indicators, Bollinger Bands, Keltner channels, ease of movement indicator, probability of expiring cone, which is great for option traders, my 22 best candlestick patterns, a real basic primer on the psychology behind each of those candlesticks, and even long-term analysis for investors. You're going to look at setting up support resistance zones, correlating futures to different stock groups, and chart setups for scalpers and swing traders. And our latest one we just put in there is an amazing one for short-term traders, where we look at a very unusual short time frame that I think you're going to find really interesting. This is just a small sample of this huge video library. I think you're going to love it. Now, you would pay thousands normally to get all of this information, but you can get these 80 videos plus over 350 videos in our entire library, and do binge watching if you want, for $18.50. All you have to do is write to me, slim at askSlim.com, or go to our Contact Us link on the front of the web page and ask for that special Level 2 link for the video library, $18.50 for 1 month of binge watching. Amazing amount of learning you're going to do during that period. You're done after that, or before you would renew, just cancel, no problem. We really want to give you a real sense for what we do here at askSlim.com. So please do write me for that, and I hope that once you do, you're going to just say, wow, did I miss a lot, and I'm ready to learn a ton from all of this. All right, thanks a lot, and we're going to move on to the rest of the show. Here you go right here, and you will see Urban. Urban is the biggest gainer for the week, up 14%. Now, the odds are pretty high when I look at Urban that it's not going to be able to keep this rally going. Now, it is early in the rally, and you can see the resistance zones right over here. So note the low right over here. You could see this cycle, this arc on the bottom. It's called a cycle bracket, and then that bracket shows you that when it peaks on the left side of that, it's called a left-hand translation, and when that happens, it has a long time to continue on the downside. Here's the peak right over here, and here's how it continued all the way down through that projected low period right here. Note the cycle rhythms that you can see in here, and when there are not important good lows and just minor ones, we call those swamped, and it shows you how bullish the condition is, especially when it's riding up that 13-week moving average. And we have different indicators that we use that help us with that. And then you could see the head and shoulders top that formed in there, and actually here's where the measurement was, down at about $19 right there. It didn't get that low, but you can see we're expecting that it still might. So we're in a rally now that's only in the early part of this cycle, but remember, this one peaked in the 3rd week. That might happen in here also, maybe 2, 3, 4 more weeks into this resistance zone, and then rolling over. Analysts have upgraded this stock, and we think it's a sell. That is Urban Outfitters. I wouldn't buy it here. Take a look at Wynn. Wynn is a stock, though, that we have liked, and I think Wynn is putting in a major bottom. So just a note in here for our subscribers, we had a yellow zone in here, and we removed that. We put that in too soon. It didn't really have enough of a breakdown. And then you had this big upside move right over there this week as it explodes on strong Macau numbers in China. And at this point, for the longer term, I love it. And you can see our projection. You can see the support buy zone right in there. So what we expect is that it's going to get a correction in there and then move down, and that this whole period in here, that cycle, is a base. You can see positive cycle, positive cycle. This is where the Wynn problem started right over here. And of course, he left the company, and they have had to deal with those issues for a long period of time. That brought this big decline right over here. But now the stock really looks to me like a screaming buy. I think it'll pull back here into the mid to late May time frame based on this pattern, and then explode up. Our target for, we'll call it the summertime, is at around 160. So given the opportunity to buy it here, like under 130, these support zones, I think that would be a very good opportunity. You just watched the opening to the askSlim Market Week show. To watch the full show, just become an askSlim free member. It includes my analysis on the best and worst stocks for the week, and my short-term view in 5 major markets for the coming week. You're going to learn a ton about charting, technical analysis, cycle analysis, my unique way of looking at charts, and we show lots of ideas that may bring some great setups for you going forward. Here's what's in that great offer that I think you're just going to get a ton of benefit from. You're going to get the full Market Week show, You're going to get Market Week archives, the special videos from our premium library, sneak peeks to great new products coming up, and all kinds of things along the way that we're going to put in there that you're going to enjoy. All you have to do is become an askSlim free member, and there is no credit card necessary. Please do join and take advantage of that and watch the rest of the show.